How many decisions are being made right now based on a forecast that's already wrong? This model is designed to reduce that gap by updating the forecast every month as actuals come in. My name is Mahmoud Farag. I'll walk you through a monthly FP&A analysis model, and what you're seeing here is a full 12-month operating cycle. Each month, actuals come in. We look at what happened, we explain the variance, and we evaluate whether the 2025 and 2026 forecasts still hold or need to change. After each close, starting with January, the month is locked. A new version is saved and the cycle moves forward. As more data comes in, the analysis becomes clearer. The commentary improves, and by December, we have a full year of actuals, ready to roll into the next budget cycle. In this model, everything sits in one tab: inputs, calculations, and outputs. So when assumptions change, you immediately see the impact, especially in the visuals, which help support real-time analysis. For context, assume it's December 2024. The 2025 forecast equals the original plan, and 2026 follows the same baseline. At the start of the year, forecast equals budget. Then, as new information comes in, that starts to move. I'll briefly show the schedules so the structure is visible. Now let's start the simulation by building the model first. We are still in December 2024. Here and here, I'm going to add dynamic labels. Okay? Then here, I'm going to calculate the variance and percentage change monthly, quarterly, and yearly for both 2025 and 2026. Also, the headings, if you look at the formula bar, are made of formulas. And the reason they are not appearing is because of custom formatting, as you see here. Now, let's start the build. We'll start with data validation. Now, let's make a small test. Okay, it's working. Now let's make our final test. Everything seems to be working. Now I move from the volume schedule to structuring the graph in data so the trend between actual and forecast becomes easy to see. Now, the revenue schedule, I'll aggregate revenue and then backsolve for average prices. In the pricing schedule, average price is simply total revenue divided by volume. So, starting with January, I'll create a new version of the model dated January 31, 2025. Then load actuals across volume, pricing, and revenue, each with its own commentary. Then I'll review the results. Now we take a quick look at the commentary. We had strong demand driven by marketing efforts in January, and as a result, volume exceeded forecast. Marketing efforts to support volume are planned to continue for the year, and forecast remains unchanged pending trend confirmation. We may continue marketing efforts on volume for 2026 as well, and forecast remains also unchanged pending sustained performance. Now we move to the pricing schedule. Now we take a quick look at it. Prices were lower than expected for the month of January, and sales representatives used more discounts to secure sales. And price forecast remains unchanged given current discount pressure, and we expect fewer discounts may be required going forward. The 2026 pricing forecast remains unchanged, and planned marketing efforts may support price recovery. Now we move to the revenue schedule. Revenue was higher than expected due to higher volumes. and higher volume if set lower than expected prices. Revenue forecast remains unchanged, and we will monitor if higher volumes sustain to confirm durability. The 2026 revenue forecast remains also unchanged for now. We will revisit as visibility improves. From there, the same processes continues. And for this walkthrough, I'll jump ahead to March so things are not too repetitive. Now, with 3 months of actuals, performance is consistently above expectations, around 5 to 6% here. So, based on that, I'm going to increase the forecast for 2025 by 5% and for 2026 by 4%. Now, our volume in March exceeded expectations again, and lower price points and marketing efforts continue to drive performance. And given year to date performance, we have increased our 2025 forecast. Volume forecast for the remainder of 2025 is up 5%, which what we just did. And we have also increased our volume forecast for 2026. Expected volume for 2026 has been increased by 4%, which what we just did. Moving on to the pricing schedule. As you see, the pricing remained slightly below expectation for 3 months. So we're gonna lower the forecast for 2025 and 2026 by 1%. Prices were below forecast for the third consecutive month. To maintain volumes, lower pricing is required. We have reduced our average price by 1%. For the remainder of the year, lower pricing is required to support market share. And we just did that. Lower prices may also be required in 2026. To sustain market share, we have reduced our average price forecast by 1% in 2026. And we did that also in 2025. The revenue schedule. Revenue increased for the third consecutive month. Higher volumes continue to offset lower prices. Our 2025 revenue forecast is up 4%, driven by updated volume and price assumptions. Our 2026 revenue forecast is up 3%, driven by updated volume and price assumptions. Now, moving forward to December, I just saved a March file and created a new version for December. And again, the only reason I moved from March and jumped to December is so things don't get too repetitive. First, I will update the month. Then, I'm going to rebaseline the forecast for 2025 and 2026 for volume and pricing. And revenue will just update dynamically based on volume and price. Now I'm going to rebaseline the forecast. Now I'll load the final set of actuals and close the year and repeat again for the pricing schedule after I finish here. The volume for the month was regularly in line with our forecasts. Marketing efforts have worked consistently throughout this year. It is the last month of the year, so we do not have a forecast remaining. Note that we last increased our 2025 forecast in March. We will revisit our 2026 forecast when we roll the model forward. Note that we last increased our 2026 forecast in March. Now we move to the pricing schedule. I'm going to load actuals. Pricing for the month was roughly in line with our forecast. Lower prices have been needed all year to get desired market share. It is the last month of the year, so we do not have a forecast remaining. Note that we last increased our 2020 forecast in March. It is the last month of the year, so we do not have a forecast remaining. Note that we last increased our 2025 forecast in March, and we will revisit our 2026 forecast when we roll the model forward. And note that we last increased our 2026 forecast in March. Now we move to the revenue schedule. As we see, it updated dynamically. December revenue is in line with our forecast. Higher volumes offset the lower prices for the month. It is the last month of the year, so we do not have a forecast remaining. Note that we last increased our 2025 forecast in March. We will revisit our 2026 forecast when we roll the model forward. Note that we last increased our 2026 forecast in March. Now I'm going to log prior period labels so we keep a fixed reference point. Now we roll into a new fiscal year. Of course, all the labels are dynamic. That's why it updated automatically. Now I'll roll the schedules forward and extend the forecast into 2027 and set a new budget. Now, last year grew around 11%, which felt a bit aggressive, so I decided to use 9% instead. Now we move forward to the pricing schedule. Now I'm going to clean up the model now, including volume and pricing schedule. First, let's test something. Okay. Finally, I'm going to start reviewing the model as if I just inherited it, so I don't assume anything is correct. First, I zoom out to get a full view and check that nothing is missing. Then I locate all inputs. Now I'm going to pick one column and review the formulas in each cell. After that, I'll check for row differences across the schedule, then repeat the same process throughout the model. Now I'll start. Good, no row differences. Also good, no row differences. So what I should do now is to repeat this same process throughout the model. But I'm not going to do that so things don't get too repetitive. So basically what I'm saying is I'm confident that the model is consistent, everything ties together, and it's ready to support decisions.